All right, we are live, and Nikki, you're down just south of me in Cincinnati, right?
Cincinnati, yes, home of the chili.
Home of
Yeah,
the
when was the
chili.
last time you were in a Skyline Chili outlet?
Me?
Yeah,
Yes,
yesterday.
last night we had
Last-
Skyline for dinner. But Rob, I am not a Cincinnati girl. I have lived here for I've kind of migrated around the United States and I've lived here for about 20 years and I have an 11-year-old. So I'm not the chili fan, but he is tried and true diehard chili fan. So we gotta go. I get the buffalo chicken wrap. It's not, you know. But we were there last night.
And finally,
There
some
you
nice
go.
weather in Ohio. I'm looking outside. Normally, it's snow and gray. It's beautiful outside today, I'm
It's
assuming.
spring. It's
Mhm.
spring, right? Let's go. Let's go housing
Spring is
market.
sprung. I
Let's
love it.
go. It's sprung. It's here.
Now we just need the housing market to, realize that spring is here, and
Yeah.
that would be
What's wrong with the housing market,
a
Rich?
what's
Is there
wrong with
something wrong with the housing market?
I mean, it's been in a, deep hibernation for some years, but it's jolt of life would be nice, right?
What kind of
We'd
life
like
do
some
you want?
loans. We'd like to close get some families in homes, some more families in homes for sure.
I want to see 599 30-year fix. That's what I want to see.
I want to see homeowners insurance going back to costs like 3 or 4 years ago.
That would help as well. That would
That will
definitely,
be nice.
yeah. Well,
Well, Cincinnati. Are you looking forward to the Cincinnati Reds season?
Tito.
Are they still
I
called the Cincinnati Reds? I don't even know.
They're still the Reds. They're still the Reds. I hit a couple games last year. But yeah, I'm looking forward to it. Listen, I'm not the sports fan that follows every game. I like to be there for the hype. So I'm an in-person, go to the Bengals game, do the tailgating, but I don't turn it on TV.
My daughter's fiance works for the Golden State Warriors. He's a video editor for the Warriors.
Cool.
And tonight is a big night for him and for potentially Stephen Curry, who may shoot. I don't know how. I think he's two away from his 4,000th three
Wow.
point. And so at that point in the game and in the stadium, I mean in the arena, they will play my daughter's fiance's video that he's been working on for a couple of weeks and on national TV. So he's
Oh,
pretty
cool.
excited about that tonight.
We'll be watching that one. While I don't have it on TV, my 11-year-old absolutely has it on TV. And in fact, we had to watch the basketball game. We had to sit at the bar at Skyline last night so he could watch the basketball game. Huge Steph Curry fan. Huge Steph Curry fan.
He's a genuinely nice guy.
You know what you gotta watch. I just got done watching it last night, the new Netflix special on the Olympic basketball team and their gold medal tour in Paris. It's incredible.
Is
It
it?
is shocking levels of behind the scenes stuff with Steph and LeBron and KD. It is so good. And the last episode is basically just the gold medal game, which Steph Curry just goes absolutely crazy in the fourth quarter. I mean, it was really, really good. I would highly recommend it to any hoops fans out there. It's called something gold on that. It's one of the new releases on
Yeah.
Netflix, like in their
I,
time.
um, I know this
That'll,
is a mortgage show, Nikki, but yeah, we talk about sports a little bit to the extent that I can. And I don't think I'll ever forget going to the NBA All-Star game in Cleveland and how much Stephen Curry was despised or hated or whatever because of previous history. And, he would come out and they were booing him and booing him. And as the game went on and he was scoring more and more, he turned the crowd around. He
Yeah.
turned the crowd around so that the crowd there was actually cheering for him and rooting for him. And that was really neat to see. So,
He's hard to dislike.
one of those be so good they can't deny it, right? Like be so good they
right.
can't deny it because at that point you're just a hater. Like this is amazing from any perspective.
Yeah.
You got to remember that we played them 3 years in a row in the finals. I mean, I mean, it's, you develop some really bad feelings, for the
Rich
opponent.
said it's personal. It's personal.
Right. But that's worn off for me. I honestly, I've lost my ability to stay angry at Steph Curry. Especially after watching again this documentary this last week, it was really good. So, but
What's
let's
the
go
Yeah.
ahead.
Now
one?
I watched
What's Oh, go ahead, Nikki.
I did watch the one on him growing up. I don't know, I forget the name of that one as well, but that's pretty cool too. Just knowing how, his struggles growing up and being the smaller guy and just the underdog. I love a good underdog. I don't only root for him, but I'm back there supporting him. So yeah, there's some good ones out there about him.
You don't think of him as being 6'3".
I know, right? Because
The
you see,
little guy.
yeah, the little guy, right? Yeah, exactly. He'd tower over me. Are you sick? You're probably 6'3", right, Rob?
No,
Huh?
I was 6'1". I think I'm 6 feet now.
Oh yeah.
Robbie, Nikki, I've got a son, Robbie, who uh, is in the business, and he says the other day, he's like, "Dad, how's it feel to shrink?" You know. Anyway, I think I'm 6 feet now.
All right, well, let's go ahead and get into it. I'm Rich Swerbinsky with Onward and Upward Consulting, and this is the big picture presented by our friends and sponsors at Depth. 20 years of very, very ably serving the mortgage and fintech space, public relations, strategic communication, brand management. Carrie Milam and her team at Depth, outstanding and many, many happy clients. And we're happy to connect you with one of them or with Depth if you're looking for a company to help you tell your story. So thank you to Depth for your support of the big picture. And as always, pleased this week to be joined my esteemed colleague and co-host, Rob Chrisman. Rob, good to see you. And you're on grandparent duty, it sounds like today.
All morning, last 5 hours.
There you go. All right. Looks like you're hanging in there good. So,
I think there's a margarita with my name on it here, and shortly. I'm not a big day drinker, but I might make an
okay.
exception today.
And this week, very, very pleased to be joined by our special guest. She is the National Community Lending Strategy Manager for Fifth Third Bank, Nikki Bialka. Nikki, thank you so much for joining today.
Hello. Yes, happy to be here. Thanks for having me, guys.
All right. Super
When
excited.
you joined that company, Nikki, did they make you memorize the story of the name Fifth Third?
No, but we have a museum. So Rob, you probably don't know that. So when you come, don't worry, I'll make you memorize it.
All right.
And Nikki, 16 years at 5'3", right? I mean, you were underwriter, closing manager, managed some operations, and since you've kind of done it all before you've been in your current role for 3 or 4 years, but you've run the gamut at 5'3". I love it.
Yeah, it completely on accident too, It was I came to Fifth Third because I heard about their great benefits. Their tuition reimbursement was like, all right, let me go over to Fifth Third. Let me see what they're doing over there. And then I'll go sell medical device sales and I'll make a bunch of money. That didn't happen. But what happened was, like many of us in the industry, the running joke of, I don't think anybody really planned to be in it. Didn't plan to be in it, but definitely fell in love with the ability to impact and the intersect of housing and community. And so, yeah, I've bounced around. I've done a little bit of it all. It's been fun.
I love it.
Medical device sales. How long were you in that?
No, that was the goal. That was the goal. That was
Oh,
the
wow.
trajectory. I was going to come here. I was going to get the tuition reimbursement. I was going to get the degree, and then I was going to go off. That was the vision. So I didn't do it. I'm here.
Yeah, well, we're happy for that. So,
Me too.
and thanks for joining us, Nikki. And yeah, looking forward to the discussion today.
Yeah.
So, and Rob, what a news week! Holy crap! It's been, last year was really a slow news year for the mortgage industry, but not the case in 2000.
Hang on. I need to address Howard's comment here. Once you're in it, you become too numb or dumb to do anything else. So I will stick up for the poor mortgage industry. And I remind people, like, if I'm at a conference or an event And I say, look around, look who you're hanging out with. Look at our surroundings. Look what we're doing. We're helping millions of families, millions of people, and it's not such a bad. We kid ourselves about it, but really, if you think about it, I'd rather be doing this than tar papering a roof in Mississippi in August or something. So not so bad.
I
Yeah,
agree.
on
No,
cue, Rob,
right.
your heckler is in the Q&A, of course, asking why your fireplace is not lit.
Yeah. Oh, yeah.
Because it's probably what, 80 degrees where you are?
No, it's cold.
Oh, okay. All right. Well, that makes the question actually
Well, the
relevant.
West is getting hit by quite a storm, and whether if you're in LA County, you're now dealing with mudslides. If you're high up in the Sierra, you're dealing with road closures because of the snow. There's a lot going on.
Wow. All right.
Severe weather is here to stay.
Wow. And it's beautiful in Cleveland. What a role reversal.
Yeah,
All
no
right.
kidding.
So anyway, Rob, big news week. Of course, we got the bombshell news early Monday morning. Rocket Mortgage acquires Redfin for $1.7 billion. The same day, Anthony Shih announces his return to Loan Depot. Not a great year for them in 24, and Mr. Shih back at the helm. He had
I think it's
stepped down.
Shay,
Is it
by
Shay?
the way. I think
Shay?
it's Shay.
He's I've tried like 20 times to get him on the show, so I'm just gonna keep pronouncing his name wrong until he comes on. But uh
That'll lure him on for sure.
should, right, yeah, right, exactly. And then of course today, Bill Pulte confirmed as FHFA director by Congress. Where, as always, I ask you, I lay the news out to you and ask you where you're going to take it to get the show started.
Well, I think I'll pick the first one because I um speaking of my son Robbie, he actually worked at Bay Equity, which is owned by Redfin, which will be at some point owned by Rocket. And it's I've gotten, a dozen LinkedIn requests by Bay Equity ops people, as you might imagine. They are there may even be some on this call. I don't know, but
Listen, if any need a great career coach, I know one here in Cleveland that, yeah, he's great.
yeah. So I think I'll pick that one. Regarding Pulte, I don't think, aside from the person who dropped out voluntarily before he was even set to be confirmed, I think everybody has sailed through uh, Congress, right? Um, and maybe sailed is too easy of a word, but I think everybody's been confirmed, so that's not a big surprise. It will be interesting to see how he does, given his family's builder background. So hopefully good. But yeah, I'd say the big news that has more ramifications for the industry is the Rocket Redfin news. And not so much specifically that, but the fact that it highlights or reminds us how important data is and control of that data, the source of that data. In this case, real estate agent data, and trying to go up the funnel or up the upstream or whatever, trying to get leads earlier on and trying to control that business. And I think, Rocket's no dummy. And I remember when Redfin bought Bay Equity. And by the way, I'm going to the Warriors game with the Bay Equity boys on Saturday.
There you go.
Um, the Redfin stock price has done, that. And so for a variety of reasons. So for Rocket to come in and buy Redfin is interesting, but Rocket has, a different time horizon than many companies, and I think that they see value there in that information and in that relationship. Right now, Bay Equity, about 70% of um, its business is coming from Redfin agents, and so, to capture that business, I think is of paramount importance to a company like Rocket, and it's certainly not going to be the last mergers and acquisitions deal that we see this year. Whether it's a branch moving to a different company or an entire company being bought. Union Homes purchased a few weeks ago of NRL in Texas, the bigger getting bigger. And to the extent that they can buy another company and streamline things and save some money, I think they're going to try to do it. So we haven't seen the last of it.
Good points, and good transition.
And by the way, to tie it into Nikki, because that's what we need to do here. The reason Fifth Third is named what it is, isn't that because of mergers and acquisitions in the past?
It's true. Yeah.
Yeah. So
And Nikki, we have seen, if we look at like the last 5 years in mortgage lending, yeah, I remember 10, 15 years ago, depositories were doing 70% of the mortgage lending in America.
Yeah.
Last year, independent mortgage banks did 83%
Yeah.
of the mortgage
Yeah.
lending in America. And as Rob noted, all these big IMBs, the Guilds, the Cross Countries, the Rockets, they're all getting bigger. They're all growing, they're all scaling. Um, and it's easier for depositories to make LMI loans, to do affordable lending in a lot of cases because they have a portfolio to lean on. They're not at the behest of just secondary market products. Do you feel like this transition, in market share shift that we've seen here in America in mortgage lending has hurt affordable lending initiatives, low to moderate income lending initiatives in general?
I don't think it's hurt it. I think that, obviously there's opportunity, but what I think that we need to caution is getting too big, getting too quick, getting too digital, and losing that personal touch and hand-holding and fostering people through the homeownership process. And so, and that's for any of our consumers. So making sure that you've got an omni-channel approach, right? So keeping that big beast going, the online, the faster, but also making sure that you've got trusted advisors, especially in the first-time home buyer space where you're nurturing them through, a lot of different challenges. It's an emotional journey, and you really want someone to foster you through that. So I don't think hurt, as long as we keep a focus on the consumer in our communities, and we're making sure that they know all the things that they need to know. So I don't know. We'll see with this one. I think as long as we have a focus on supporting some of those smaller initiatives, that the other concern is when we get really big, we paint with a broad brush. And a lot of these underserved communities, low to moderate income communities, have very unique challenges that you have to have, like you mentioned it, mortgage banks having the portfolio to be able to create some of those unique products to see how we can help a community. So I think that there are differences. There are things that we can do different that can really fill that gap. And as long as the IMBs and the folks going after this market share keep their families and the consumer at the center, we'll be okay. We'll see what happens.
So Nikki, what's your son's name, by the way?
Julio, Julio. Yep.
Does Julio know what you do for a living?
He does. Yeah. He gets to come with me often. I got to take him. We did a homeownership event in Tampa in December with the Buccaneers, the city of Tampa Bay Partnership. And it was the first event that he got to travel with me and kind of hear me and see me in front of consumers and just driving the importance of homeownership. But he, of course, you have sons, so they see it, they hear it, it's ingrained in him. He knows the importance of homeownership, finances, all of that kind of stuff. He's around it too much to not adopt some of it.
And
Very
Nikki,
good.
the situation we have right now in America, affordability is really seriously challenged. We have so many sidelined wannabe home buyers, so many sidelined wannabe first-time home buyers, and with the challenged affordability climate as well, even more crucial to get to these prospective home buyers earlier in the journey, be financial counselors to them, educate them. Any words of wisdom, just best practices for mortgage lenders in the audience listening, on ways they can kind of step their game up to address this growing field and group of the home buyers of the future that, are all kind of waiting in the queue for the climate
Yeah.
to Here.
Sure, sure, absolutely. So first and foremost, I think if we're thinking about your strategy, you need to make sure that when you're looking at your people, do you have the right people? Do you have advisors? Do you have subject matter experts on local tools, your state HFAs, your local government down payment assistance programs? Do you have people on your team that have mastered those products that can serve your community? So that is first and foremost. Do you have the right products? Do you know your community? Have you taken a data-driven approach to understand the needs of your community? But more importantly, have you listened to and met with your community partners to understand what they feel the gaps are? So it's a two-pronged approach, right? You have to have the data to support, and what the data shows us is the growth opportunity. I get excited about it, right? It shows, look at all this opportunity over here. But to your point, we as an industry need to mobilize around it, and we need to go to the community. We need to go to where they're at to first and foremost inspire them that homeownership is still possible. It is still the American dream, and it is still the American dream for all. I think that, there's a lot, from your phones to your TV to the news to your YouTubes. There's so much information, and the majority of it is negative because that's what gets attention, right? So there are consumers that are ready today that don't think that the market is ready for them. They don't think that they can become a homeowner because housing prices are too high, not realizing that there are products and programs out there. Even if it is too high, there are markets where we're seeing cities with 50 to 80,000 down payment programs. We have this thing at Fifth Third Bank. If you've ever heard me speak or our senior leaders, it's family, not a file. We call it a family. It is not a file. And we love to tell the stories within our internal meetings to just show the impact on the lives of the people that we're helping become homeowners. And I shared a story yesterday of a woman, a single mom, Andrea, who after a year and a half, she became a homeowner. She stopped during the process because her offers weren't getting accepted. The market was too busy. She stopped. She came to us. One of our mortgage loan officers was able to qualify her for $90,000 in down payment. It was a state, a city, and our Fifth Third lender down payment match. And that stacking of those programs is what's making the difference in a lot of these markets. And if you don't have a mortgage loan officer, or your teams aren't focused on becoming subject matter experts on those programs, let's face it, guys, they're not going to try it, right? These programs are nuanced. They have different guidelines, similar guidelines, but once you get into them, they have nuances, and you really have to be an advocate for your consumers. If you're getting deals like that done, it's not only that the mortgage loan officer is fighting for that deal on the front end, but you've got a top-notch disclosure team. Your processors, your underwriters, and your closers understand how to make sure your disclosures and your documents and everything are right. That stuff it's not just the easy, kind of run-of-the-mill that comes in, things that you see every day. Those are things that really take a team coming together to make sure that they're doing all the right things as they're handing it off to get that customer to the closing table. So I think, to answer your question, it's making sure that you've got the right products, you've got the right people, and then you're driving that inspiration. And what that looks like to us, and what we've been focused on, is how do we bring the industry together to meet the community? How do we bring in other lenders? Because in this space, there's room for all of us. And I truly believe that. We truly believe that. So when we've started doing these outreach events, I mentioned the one in Tampa, we're doing one in Columbus soon with the Ohio Mortgage Bankers Association. The thought is, I don't want the nonprofits doing all the technical work. My team is going to come in and do it. We're going to handle the facilities. We're going to handle the vendors. We're going to handle everything. We're going to get the experts there, those technical services and support, so they can keep doing what they're doing on the front lines. And it's been really cool and fun, and bringing other lenders along with us and bringing other industry of friends. It's a collaborative approach to supporting the community. And at the end of the day, we're dealing with communities that historically don't trust banks. They don't trust lenders. If you look at the discriminatory practices of the past, there are valid reasons why these communities might not trust banks. So it is incumbent on us to create that trust, to inspire them. We do a Mythbuster session during these outreach events where I have mortgage loan officers, I have realtors and realtists on the panel, and then I have developers. And the reason is we always talk about getting your credit together, getting your budget together. Here's the products, here's the programs, here's the down payment. But we're missing the fact that people think today, even if there's not a home ready for them. And so we also bring developers to the table to say, it's about the idea of we're out here working while you're working on getting ready to become a homeowner. They're working on getting a home ready for you. It's out here. Don't give up. So I think that idea of inspiring them that it's still possible, giving them the information that they need to understand where they're at today, and then connecting them with a local subject matter expert that will foster them through the process is critical. Once you do that, everybody in their circle of influence knows. Their cousins, their mom, their church, their people they work with. When you help someone become a homeowner that did not believe it is possible, they are the best referral source for you to get more business. Did I
Hey,
answer your
Rich, I think
question?
I was going to say, Rich, in the future, maybe we should have somebody who knows their subject matter a little better, or somebody who's more passionate about their subject matter on the show, because this is pretty boring.
No, I love it. And Nikki, and this is the big picture presented by our friends and sponsors at Depth. And Nikki, you
So
mentioned a
hold
couple.
on, Rich. I got the stage here, Rich.
All right.
I wanted to ask Nikki, because there are a lot of brokers who are tuned in here, a lot of originators who work for IMBs, and how if somebody is kind of doing their thing and has been doing it for a number of years, but wants to learn more about becoming a subject matter expert about affordable housing or the programs, or bringing in developers. So where do they even start? What would you tell a loan officer to how to kickstart things?
So I would say look at your market, right? What's going on with your local city? What's going on? Are there any work groups or work streams that are happening at a local level to combat affordable housing challenges? That is where you can find the challenges and the opportunities and solutions that local community, city, nonprofits, foundations will be investing in. So I think going there, and then looking at the different nonprofits in your community, who are the ones that are producing the HMDA data reports and are doing analysis on the current state of housing. Oftentimes they are calling out the groups that are working on it and doing well. Link up with those individuals. Go find out what they're talking about. What is the challenge in your community? I would also say some of the, faith organizations, housing counselors, but I will say you can't just show up one time. This is you have to show up and partner. You can't just cut a check and expect that then you're going to close a loan together. It means showing up and having a seat and being a part of the solution as a thought leader. It means bringing your friends into the solution. It means signing up and joining boards and being a servant and being of service to that community organization. And that's how you create a reciprocal relationship where you're starting now to partner to put more people in homes.
I continue. I mentioned earlier, I do some traveling around, and I talk to groups, and whether they're companies or organizations, regional organizations of the MBA or whoever, and I continue to remind them why individuals and people are so important in this business, and why borrowers are best served by going to a person rather than just typing in, best mortgage rate in a search engine like DuckDuckGo. I mean, they don't, I mean, the level of service is so important in this with every facet of lending, but especially this. That's why I don't think the internet is going to replace originators. So
I think it is
my two
either.
cents.
I agree. I don't think it is. It's the biggest financial decision that most Americans will make, right? And so when you're working with people that are already untrusting and scared, you have to foster them through the process. And so I agree.
Yeah, I
They
would.
need us.
Uh,
They need us.
that's right. That's right. Buying a home is not Rich's largest financial transaction of his life, though. Rich, didn't you just buy like a Mickey Mantle rookie card or something, or a
I
Honus
wish.
Wagner tobacco card or something for a million plus?
I'm still trying to get your Nolan Ryan rookie cards off you. Yeah, but no, no, I didn't buy that, unfortunately, for me. But
Oh, all right.
yeah,
I just
but
want the Bo. I just want the Bo Jackson cards. I want the Bo
Bo,
nose.
there you go.
Bo
Bo.
nose. Remember those?
He's got a great card market. Yeah, people love to collect Bo for sure.
Is he alive?
Yeah.
Is
Mhm.
he?
Yeah, he's
What's he
alive.
doing?
He's very active in the sports card hobby. He signs a lot and attends a lot of shows. He's super popular. Like him and Dion too. Like those are the two guys from like the late
Yeah.
80s, 90s. Like Dion's obviously, high profile now as a coach with his kid who might be the Browns' next quarterback, by the way. But yeah, but they both stayed, active in different ways, but they are two, hobby darlings that yeah, collectors love Bo and Dion for sure. So,
When an athlete signs a card, does it bring the value down or up?
I mean, way up, I mean, it's typically, like a 10x, 20x, depending on who it
Really?
is. And yeah, so, but yes, that's big business, big business. That's the one thing that's really changed with the sports card world is like now when you open packs, you're hoping to find autographed versions of cards, as opposed to just the best rookie card, like when we were young. So, but Nikki, you mentioned a couple times the importance and the criticality of having the right trusted professionals in the communities. My last lending job, I ran lending for a bank that was in Cleveland, basically just outside Cleveland, but very diverse community. So we were always really hyper focused on finding those professionals, and it was tough, to find those really trusted professionals that wanted to be mortgage originators and, to your point, wanted to be present and wanted to put the time into developing those relationships. We would work with our community development core partners to try to identify them. We'd build some of our own people, maybe that didn't have the experience, that had the interest, and
Yeah.
just in running the mortgage collaborative as well. A big challenge for just independent mortgage banks and all mortgage lenders is, finding good, trusted professionals in communities where there are affordable lending, LMI opportunities. Any, words of wisdom or thoughts for lenders that struggle with that?
Um, yeah, I would say you have to have those subject matter experts. But I think a part of making affordable housing all of our job. It is all of our job, even our top producers, right? And let me back up a little bit. Let's talk about the reason. Why do you think it's hard to find those professionals?
I just think, yeah, I mean, historically, I mean, to your point, it's like the mortgage industry, right? Like nobody gets in it conventionally. So at least to me, it was always a challenge to find, diverse or, professionals that, were parts of diverse communities, that were interested in that, or maybe had the knowledge of, like um, the pay it forward, the rewarding nature of the job and the ability to make good money too, if you can be good at serving those communities.
Or the belief that you can be in that role, right? So the awareness, the belief, the experience, those kind of roadblocks, and so when we're talking about that side of things, but I think too, if you think about just our traditional MLOs that are out there today, why aren't they subject matter experts, right? You guys remember that what commercial was it? The easy button, the big red button that you would hit that was like easy. These
Oh
are
yeah. Yep.
it's the easy button, right? So when you're incentivized off of volume and there aren't the same nuances or time requirements potentially to stick with someone through a transaction, the people are going to go the path of least resistance and naturally, well, maybe not naturally, I don't know if that's the right word, but people are going to go the path of least resistance. And so I think that what you have to do is embed it in your culture, that it is all of our jobs, and you have to show your mortgage loan officers that might not be in the space. And if you're a mortgage loan officer that isn't in the space, show them a product or tool that they can use that can impact the space. I am madly proud of our special purpose credit program, which we might dive into here in a little bit, but we rolled out and started our journey about a year and a half ago. And our top two special purpose credit program producers are the top two producers for our entire bank.
That's awesome.
The way that these guys came in and spent time to understand the product and the program, any of the gray, right? Spent time with me to understand any of the gray so that they could really represent it right. What I saw them do with that product and fit it in to diversify their business tells me anybody can do this. Anybody can do this, right? It's just about getting them trained on the right product. So to me, it's a few things. We've got to train some people up and make sure that this is their focus and have it real niche and in the communities that need it the most. But the whole team should have a product or two that is focused on affordable housing and that they can master.
If you could, Nikki, just because I feel like there's a lot of people probably listening that have heard of special purpose credit programs,
Yeah.
but maybe don't intimately know what they are or what they do. How do they help address kind of home ownership disparities? And are there challenges lenders face in implementing them?
Well, yeah, I mean, you got to you have to make sure that you are checking all the boxes, right? And so special purpose credit program are an ECOA allowance through Fair Lending Act, right? So it's guidance to extend special terms to historically underserved groups that were historically left out of participation, right? So what do you need to do to expand access? Well, you got to do a lot. You have to first understand from a data perspective what are the gaps, right? So if we think, let's talk about Black homeownership and white homeownership being a 30% gap, right? That data alone is pretty strong to say, hey, we need a special purpose credit program. But then you got to dive deeper. You've got to dive into denial reasons. Why is the disparity? What is happening over here? Why do you think that whatever change to this product or program is going to impact this community differently? The Homeownership Council of America was very influential in standing up the MBA's Special Purpose Credit Program Toolkit. So if you are a lender that doesn't have one and you're interested, I would highly suggest that you go to the MBA Special Purpose Credit Program Toolkit. I used it. It was a guide for me. I brought trusted advisors along. I had, Laird and Bernard Nasuli from iEmergent alongside of me from a data perspective. Like, guys, help me out. Make sure we've got this knocked out. You bring your fair lending, your compliance, your legal teams. Everybody, you've got to do it the right way. You have to prove the need, right? But then once you prove the need, you deliver the product. We have our own portfolio product. We actually have 5 products underneath our program today. We piloted the Freddie and Fannie. We're doing things to kind of diversify in that space so that we can understand what's really working. Because ultimately, the goal is when you find one of these solutions, you want to scale it, right? So test it, learn from it, make sure it's sustainable, make sure that you're really meeting the need, and then go and scale it. So special purpose credit programs, I think, are something that we really saw emerge over the last couple of years. The OCC was a big advocate. The CFPB, the regulators were coming out saying we need these in our communities. So we've seen a lot of them emerge. OCC Project Reach has a work stream that is dedicated to special purpose credit program and how these products can really be innovative in closing the homeownership gaps that we see today.
Love it. Very, very well said. And speak of Bernard from iEmergent, great company, Bernard and Laird. And he mentions Bo Jackson, a great inspirational speaker. Yeah, he does a lot of speaking as well, Bo. But iEmergent, a great product that I know you're familiar with, Nikki, that just incredible data and analytics on just, geographic, demographic information and, lending opportunity and statistic data that very, very valuable to mortgage lenders as they're, trying to navigate serving all borrowers in their communities and, in that venture. So,
'Cause
the
you know what, you got a part of that data too. It isn't just the traditional mortgage data that we're used to looking at. I don't want to just see what the opportunity is. I want to see what the community looks like. So what is that community needs assessment? What is the area median income? What is the educational attainment? Because when you're looking at it from this perspective, are you guys familiar with place-based initiatives? Have you guys heard this terminology of place-based? Okay, so have you heard of the MBA convergence initiatives, the Convergence Collaborative, or any Convergence Columbus? Okay, so it's essentially what the MBA has done, and a few other leaders are out there doing it. We've done it, where you're going in and you're looking at a particular location and you're assessing the entire 360 need of the community. So when you're looking at it from that angle, it's not just about home ownership, but what else are we doing to uplift and mobilize that community, from job preparation to what are the services and things that that community needs? How do we start getting people ready for home ownership as we're getting the ones that are ready today into homes? So that just, the data is endless on how you can use it and should use it.
alternative credit, alternative data sources, Nikki. Of course, the Vantage score thing, it feels like we've been talking about this for 10 years because we have. And that was supposed to be rolled out in Q4 of this year in terms of lenders being able to use Vantage or FICO on loans they sell to the GSEs. It looks like that's now on hold, and we'll see what happens with all that. But in general, and if you sell to the GSEs, obviously you have to right now use FICO. But lenders like 5-3 that, community lending is a big part of their platform and their culture, using alternative data sources to help qualify borrowers. If it's rent payments, utility payments, is that something that you guys are doing, have embraced? Any trends?
Absolutely. Yeah, absolutely. Absolutely. Right. This is something that I actually think that we as an industry need to double down on. And the GSEs and some of the fintechs are doing a good job at this alternative ability to repay, right? Using your rental payments as a positive trade line, your utility bills, what are some of the things that we can show, cash flow underwriting, all of those things that are a little bit more applicable to if you really are able to pay your home or not. If you had a little bit of trouble a couple of years ago with your credit, that's actually not an indicator if you prioritize your housing. But what it is if you pay your rent. What is if you pay your utilities. And that's what people are doing. They do that before they pay other basic needs. So I think that those alternative models have to be doubled down on. But like anything, you've got to get your MLOs to do it. And when you're used to doing something the same way, that sort of change management is just something that you have to continually focus on. So they're still kind of new. There's still kind of clunkiness within it, right? So what if your bank doesn't provide this amount of bank statements, or what if this? And so I don't think it's as streamlined and figured out as it needs to be for a full widespread adoption. But I will tell you, it is part of my strategy for this year. What are we doing to adopt these changes? Part of it is learning from them, right? So adopt the changes, learn what's working well, what's not working well. Okay, cool, we'll fix it.
Love it. And community development corporations, Nikki, obviously a key piece to getting more embedded in communities, partnerships. If you could just talk a little bit about community development corporations, and for lenders listening, maybe some advice on how to engage with them, why to engage with them, and the role that they serve in housing finance.
Well, first and foremost, community development corporations, CDCs, CDFIs, they are in the heart of it. They are in underserved neighborhoods. They are a trusted resource and advisor to these neighborhoods already. So first and foremost, it's like showing up at the event with your friend that knows the door guy, right? You're getting right in there, versus showing up and saying, no, I'm good. I don't want to, you're not welcome in here. It's getting alongside of a trusted advisor. Number one. Number two, they understand those needs of that community. Number three, they're already working on solutions. So there's a few ways, right? As a lender, as a bank, investing in those community development corporations and giving them the liquidity and the ability to do more of the work that they're doing is one way that you can partner with these CDFIs. And then just getting alongside of them to, like I said, understanding the community challenges and needs and what kind of products are they offering that's working for this community. So CDFIs and CDCs are a huge part of our strategy in our place-based initiatives where we have selected. So we place-based, we had a neighborhood improvement program where we picked 9 historically underserved communities and we invested $20 million. And these are neighborhoods. So in Cincinnati, for example, Avondale. In Cleveland, it's Buckeye. So we picked select community partners like Cleveland Housing Network, Kevin Nowak and those guys over there who, they know what they're doing. We pick partners like that because it helps accelerate what you're trying to do. It accelerates your investment, accelerates the go-to-market with the consumers. And they know you're listening because you're doing the things that they're telling you they need. So absolutely, CDFIs, CDCs, those community partners are, they're the ones that the communities trust, and they're the ones that you have to build relationships with. But I will say, like I said before, it's not just showing up one time. You have to be, it's building a relationship.
Great stuff. And as always, the time whirls by here on the big picture. But Nikki, this was outstanding. Really, really appreciate you coming on and just educating our listeners, viewers on the very critical topic of, just affordable housing, low to moderate income lending, and just the criticality to the housing system and the economy in general in America. Just really, really critical, and obviously been challenged just due to affordability issues the last few years. But looking forward to the day when all this opens up. And kudos to you for all the great work that you've done at Fifth Third throughout your career there. And in your
How many years? 19, 17?
16.
16.
Yeah. Mm-hmm.
Cool.
Yeah.
Wow.
Well, guys, thanks for having me on. It's next month is Fair Lending Month. It's there's a lot of work that we need to do in the space. And what's encouraging about it is there are so many great people in the industry that want to be a part of the solution. This is the fun stuff, guys. This is really fun.
Fair Lending has its own month. Who knew?
Who knew?
In a slew of nice comments in the chat and the Q&A from the attendees. Just, giving kudos to Nikki for the education session this afternoon, which has been incredible. So, Nikki.
Kudos or attagirls?
Kudos, attagirls. But no, this was great, Nikki. And we'd love to have you back on down the road for sure. And just make you a regular here on the show to help us keep up to date on the the key issues that present our industry. So
it can be the community corner. Community corner. There we go.
Love it.
Nikki, Rich has been trying to ease me out of this slot for quite some time. So don't be surprised if you get the nod.
Did I slip and say co-host to Nikki there? Oh, I did. Okay, all right. That's right.
Is that why when I signed in, I had Rich's background?
Right.
You see? It was, okay, I see
listen,
what you're doing, Rich. I see you.
It's all part of the vast brainwashing efforts that we go through with guests here to get them to come back on. So, but thanks again, Nikki. Rob, thank you. Enjoyed the Warriors game on Saturday. Hopefully, Chef Curry gets the record and you get to see your soon-to-be
tonight.
Tonight.
Well, every 3 shoots is a record, I think, right?
Yeah. So, and to our listeners and viewers, thank you for joining us. Those on the live today, if you're listening on podcast, or most of you listen or watching on YouTube, we do the show live every Thursday at 3 p.m. Eastern, and you can go to chrismancommentary.com to get signed up for that. Always very chat interactive and a fun live show and a different experience. So check that out when you get a moment. So, but thanks again to everybody. Nikki,
thanks, Nikki.
And
thank you, Depth.
And thanks to our partners at Depth for their support of the show. And we'll see you next Thursday at 3 p.m. Eastern on The Big Picture. Have a great Friday and weekend, everyone. Take care.
See ya.